Hello, I'm Shaun Richards of Not a Yes Man's Economics, and welcome to Lockdown London. I want to move on though to the issue of how central banks are behaving in this particular crisis. And this has come home because something quite close to here at the Bank of England, there's been a lot of talk about monetary financing. This has been boosted by the fact that there's been an opening of what's called the Ways and Means account at the Bank of England. Now, what does that mean? It allows the UK government, so Her Majesty's Treasury, to go to the Bank of England and get cash. Now, that isn't as exceptional as some people would say. For example, it was used in 2009, mostly in the bailout of Bradford and Bingley, and got to nearly 20 billion borrowed at that point. Looking back before 2000, then it was used quite regularly at about 13 billion in pound terms. So it's not as new as some are saying. Some people are saying this is direct monetary financing. Well, yes and no, because it existed before. And a lot of things are being said that are not quite true. If we step back, however, central banks in general are doing an enormous amount at the minute. If we look at the United States, the US Federal Reserve was buying 75 billion US dollars of US treasuries a day at one point. I think that's now come down to more like 50 billion a day. But even so, that's an enormous amount. So they're intervening in a lot of areas. And what is the real rationale for this? Well, it is a type of implicit monetary financing, actually. What do I mean by that? Well, it's the way that they've reduced bond yields. If we come to back to my home country, the UK, it presently can borrow for 50 years at 0.5%. Just to give you an example of the change of this, I was looking at something we issued a few years ago, and the coupon was 3.5%. So in rough terms, for very long-term borrowing, in the UK, things have fallen by 3% to 0.5%. So this is a very big shift. And some of this has been driven by the way that central banks have been buying bonds themselves. This has gone on in many places around the world: Japan, the United States, the Euro area, the UK, many other smaller influences. And the net effect of all of that is that bond yields are much lower, and governments now are able to spend without the constraints we saw in the past. What do I mean by that? If we look at the crisis that hit Italy, then bond yields there went over 7%. Even in the current panic and issues, it's about 1.7%. So quite an enormous difference. And the major factor in this is the buying of the European Central Bank using the Bank of Italy as its agent. So as you can see, the issue here of what is monetary financing, in its purest terms, is where a government just goes to the central bank and gets money from it. People who, in loose language, call that like what Zimbabwe's done, or Weimar Germany, excuse me. But at the minute, it's not quite that. The UK has done the Ways and Means issue before, and then stepped out. Last time round, it lasted for a bit over 3 months. Why is it happening now? Well, the truth is, governments are spending so much, it's hard to issue bonds, in the UK's case, gilts, that fast. Spending is very high. And this is, for example, the UK has issued £12 billion worth of gilts. So it's not that we can't, but not able to do it on the scale required. And we may find this happening in other countries, because everywhere we look, we see more government spending on the health service, the care service, protective equipment, and so on. So, to sum up, is this monetary financing? It's more of an implicit form than explicit. And we'll find out as things develop as to whether it's permanent or not. Because there's one thing in this era that has been permanent, and that's the use of the word temporary. Thank you.